According to our Sing Dollar Credit Tracker, the Sing Dollar credit market returned 6.6% in 2024. In general, stronger performance was delivered by subordinated papers, long-term papers, and higher yielding credits. At the same time, it was a buoyant year for the Sing Dollar primary credit market, with 2024 issuance surpassing full-year issuances in recent years. Factors favouring issuances and the strong credit market performance include 1. Tight credit spreads. This created a favourable environment for issuers to issue Sing Dollar credit, even with interest rates remaining high relative to pre-pandemic and pandemic years. Number 2, demand for Sing Dollar credits. Order books were generally decent despite tight spreads indicating healthy market interest for Sing Dollar issuers. Number 3, relative stability of interest rates. Although yields in Asia dollar markets fluctuated in 2024, their impact on the Sing Dollar market was limited, contributing to a stable issuance landscape. Another reason for the healthy market interest was a clean record of performance and the existence of new entrants. The Sing Dollar credit market did not have any defaults or losses in 2024, maintaining a strong performance since the last significant loss of Sing Dollar 750 million, which was due to the write-down of Credit Suisse's additional Tier 1 instruments in March of 2023. Thus far, aside from the oil and gas default wave from 2016 to 2018 and other isolated idiosyncratic developments, the Sing Dollar credit market has maintained low levels of defaults. Also in 2024, the Sing Dollar credit market welcomed 9 issuers, including Singapore Exchange and iFast Corp, which we featured in our second half 2024 credit outlook. The remaining 7 debut issuers happened in the second half and were from the staple industries, including financials, with investment grade rated Canadian bank Toronto Dominion pricing a Sing 250 million additional Tier 1 instrument in July of 2024, as well as the investment grade rated Spanish financial services firm Banco Santander that priced a Sing Dollar 300 million senior non-preferred in October of 2024. There were also real estate issuers, with Singapore-based real estate developer Hobie Land pricing a Sing 160 million 5-year green bond in July, and Wharf REIC Finance, a special purpose entity of investment-grade rated Hong Kong real estate firm Wharf Real Estate Investment Company, pricing a 5-year issue in October. Although Wharf REIC is new to the Sing Dollar credit market, its sister company Wharf Holdings and parent company Wheelock & Co. have issued in the Sing Dollar credit market. Other new issuers in the second half of 2024 included Power DC Holdco, a member of Vantage Data Centers and an owner, developer, and operator of hyperscale data center campuses that priced a Sing 100 million 5-year bond at 3.625% in October. There was also Singapore Medical Group, a Singapore healthcare organization with a network of private specialist providers with diagnostic imaging and health screening services. That company priced a 90 million bond at 3.54% in November. What makes the pricing on these issues somewhat consistent is that both are guaranteed by CGIF and is externally rated at AA. The final new issuer was Korea Housing Finance Corp., a government-sponsored enterprise that ensures stable housing finance to enhance citizens' welfare and foster national economic development in Korea. KHFC priced a Sing 300 million 2-year social bond at 3.033% in November. KHFC has issued numerous green and social bonds in other countries and has a strong ESG mandate and leadership in supporting sustainability. So what's in store for 2025? We expect Sing Dollar credit spreads will remain tight relative to historical levels, though some mild widening may occur given the current tightness. Demand for credit has been supported by expectations of interest rate cuts. We think credit may remain in demand as interest rates in 2025 are expected to be flat or lower than 2024, according to OCBC strategists. Meanwhile, OCBC economists project modest GDP growth for Singapore's key trading partners. However, ongoing geopolitical uncertainties, particularly in Israel, Iran, Russia-Ukraine, and US-China relations, could lead to episodic widening of credit spreads. Further, if credit spreads remain at historic tight levels, issuers may capitalize on this by issuing more. Credit spreads may also widen should supply exceed demand, noting that the balance of demand and supply for credit has likely normalized following near-record issuance in 2024. Sing dollar will remain a relative place of safety. Although credit spreads are tight, capital losses, if any, should be contained, given still high yields that can offset potential capital losses, while interest rates are expected to remain flat or lower in 2025. And this supports our overall neutral stance for Sing dollar credit in the first half of 2025. In addition, while the Sing dollar credit market is not fully immune to geopolitical tensions and domestic challenges affecting foreign issuers, most Sing dollar credit issuers are anchored in Singapore and derive their income domestically. According to the World Bank's worldwide governance indicators, which reflect perceptions of governance quality, Singapore's stability contrasts with the fluctuations seen in major global economies. Consequently, we expect Sing dollar credit markets to continue to act as a relative safe harbor in times of heightened geopolitical stress. Our key views for the first half of 2025 include: Number 1, being neutral on very short and short tenor bullets while preferring higher yielding bonds in the belly and longer tenors. With interest rates expected to remain flat or decline in 2024, we prefer longer duration bonds to lock in yields and mitigate reinvestment risks. Our analysis shows that higher yielding bonds tend to offer better protection as their carry or income generated from the bond can offset potential capital losses should interest rates rise. Number 2, continuing to favor crossover papers in the first half of 2025, consistent with our 2024 credit outlook. Defaults in the Sing dollar credit market should remain low with the benign funding environment, economic growth, and stable credit profiles. The curves of issuers rated neutral 4 and neutral 5 have performed well in 2024, and we expect that outperformance to continue. Number 3, remaining positive on selective non-financial corporate perpetuals that are more likely to be called or those with wide reset spreads. Based on our analysis, most non-financial corporate perpetuals will likely be redeemed on their first call dates in 2025, as many have coinciding first call and reset dates. The economic incentive to call is high. Otherwise, these perpetuals could reset to a distribution rate of mid 5% to low 8% based on benchmark rates in our study. Number 4, continuing our neutral call on bank capital instruments such as additional Tier 1 and Tier 2 securities due to the tight spreads. Issued by reputable, regulated issuers, bank capital instruments can provide higher returns relative to senior issues as they are usually redeemed at their first call dates. In general, we prefer additional Tier 1s with higher yields and wider reset spreads. Thank you again for watching, and we look forward to updating you through the first half of 2025.